Today, market didn't just fail, it panicked. Sensex crashed over 1,000 points, Nifty slipped below 25,500, and mid caps felt even harder. But here's the real question. Is this the beginning of something bigger or just another temporary storm? Hi, everyone. This is Mahesh Kadan, your debt freedom coach, and today let's decode the Motilal Oswal report roundup in a very simple language, no technical confusion. Think about the stock market like a battlefield. Every day there's a fight between two forces, that is bulls and bears. And today the bears clearly dominated. Now, before we move ahead, let me quickly explain what is the bulls and bears mean. So, bull is someone who believe that market will rise. They buy the stocks with confidence, and the bulls are and why they are called the bulls, because they attack by pushing horns upward, right? Just like they push price upward. Now the bear is one who someone believes that market would fall, so they sell stocks. And the bear always attacks by swiping downward, so just like they push prices downward. So every day in the market there's always tug of war between the confidence and fear. So there's a fight between bulls and bears. And the best movie or serial, I would say, you just watch Scam 1992. That would be the best thing, where they have clearly explained who are the bulls, who are the bears. You will get a lot of ideas. Now let's come back to the topic. What happened today? So Nifty fell 336 points, closing at 25,471, down by 1.3%. Sensex crashed over 1,048 points, that is down by 1.25%. And mid caps and small caps fell even more, up to 2%. Now imagine this battlefield where the global markets are already weak overnight. US markets fell nearly 2%, and Asian markets also down fairly. When global market retreat, our market also became defensive. So the bears attacked aggressively from the opening bell. That's the problem that been there. Okay, and I will share you one this thing as well, so that yeah. So till the that image opens. So why did global markets fail? So there were two major global triggers, and if you have been watching the market closely for past recent weeks, it has been the AI concerns. Now AI is a very good thing. So like always, a thing which is more than needed, it becomes more sophisticated, more problematic. And that's why it has happened with AI also. So AI driven rally, which was pushing the global tech stocks, now is cooling down. So investors are questioning whether the valuation have gone too far or not. That's what the problem is. So when a stock or a company's valuation goes up very drastically, that means there is a point to concern. You should not invest in stock. You should uh, report, and you should act like a detective and analyze that why it is facing that problem. Okay. The second thing is that US inflation data. So important inflation numbers are scheduled today. So today night it will be scheduled. It will be live. And before such big events, no, always the big investors reduce their risk. They don't want to take more risk. Like us only, we also don't put our money in before we know that something big is coming, right? So think of this, that if a storm warning is coming, you will not go out and fight it out. You will take shelter. Right? That's exactly what global investors also did. Now I will sharing one image wherein this has been done. So if you see here, the this thing, if you see, this is the market which I was talking about. Now the sector breakdown, what let's understand who has got hit the maximum. Okay, so metal stocks fell around 3%. Why? Because base metal prices fell globally. When global commodity price fell, okay, fall, our metal companies also felt the pressure immediately, because a lot of metal companies are dependent on the global commodity as well for export of the metals. Okay, now IT stock has a dramatic day. Like I said, they opened up nearly 5% lower, but then bargain buying came in and smart investors bought at a cheaper level. So if you're one of them who are brought, then you are very good. Now finally, 1.5%, but the bulls tried to defend, but bears were still stronger overall. Now mid and small cap, they were hit even harder, showing broad-based selling. What are the positive news? They're all negative news. What are the positive? Yes, there was a one small positive pocket. Textile stocks rallied up to 5%. Because very good news, commerce minister indicated that Indian textile support exports may benefit from the zero duty if the raw materials are sourced from the US. That's a major important thing, because a lot of in like Surat is a very big commercial kind of thing, and if it becomes like a Shanghai, it will be a tremendous opportunity for the Indian market and for the economy as well. So while most of the battlefield was red, a small group of stocks quietly moved higher. Okay, now technical view. So for all those technical analysis, what next? So technically, Nifty opened by 240 points, try to hold. Okay, but the important thing is that options data suggested that the broader trading range was between 25,000 to 26,000. So which means that battlefield is again a tug of war, but again the bears have the upper hand. Now, what should a common investor like us or you do here, in mutual investor or you invest in stocks and everything? The most important thing is that don't panic. Again, the last week also I said don't panic. Panic is not the solution for anything. Okay, so market falling at 1%, not usual. It's okay. It follows. Correction is a part of investing. Okay, so that's okay, but the important thing is that if you're doing SIP, don't stop it, continue it, because when market falls you accumulate units at a lower price. In fact, you should do in such a way that in case if you can put much more money in the SIP, that would be a better. But again, these are speculations of the market, so don't speculate things. The third thing, that review your asset allocations, because that will avoid your emotional decisions. You know that okay, this is asset, I want to buy this asset, and the cash is going on, the goal is I am to achieve it, that's good. Okay, so that's the thing. But yes, today the bears have won the match. Okay, and uh, long wealth creation, that's a long war, and disciplined investors always win. Okay, so if found you so before sharing this, a big disclaimer as well. uh, this is only for education, they have also mentioned in the description as well. So don't try to act on this, just to understand that what happens in the market and how you can take the decision, or what impacting in your investments journey as well. That's very important. Okay, now if I found this explanations useful, like this video, share with someone who get nervous during the market falls, and subscribe for simple stress-free market routine. I will see you in the next update. Thank you so much.